The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. It's Thursday, 8:30 a.m., 60 minutes to go until that opening bell, and we got markets in positive territory yet again to kick things off. Right now, you're looking at an S&P positive by about 20 points, trading at 34.27. We got the NASDAQ up 84 points, 11,554. The Dow up 250 points, 28,428. And the Russell up almost a full percent, up 15 points at 1624. Gold contract catching a bid back above 1900 at 1904. You see the sell-off we had on Tuesday from 1927 down to 1877, back above 1900, and we're actually back above the highs that we had early yesterday. That high was 1902.40. We're about $1 above that level right now in the price of gold. Silver up 31 cents at 24.21. We're a solid $1.30 almost above where we were trading at the lows on Tuesday. Notes and bonds. Little bit of higher price, but we're still sitting with a 138 handle in the 10-year, 138.25, up about 2 ticks. The 30-year up 11 ticks at 174 on the dot. Excuse me. And we'll start it off with the VIX. Volatility index, 2767, backing off a bit. We finally get a lower VIX. We haven't had a lower VIX. We've had a higher market, and we've had a higher VIX to correlate with that. This morning, as the market inches higher yet again, the VIX pulling back, but barely, folks. We are 26 days until Election Day, and we got a VIX trading at 2767. All right, quite a news cycle in the last, you want to call it the last week or so, right? But the headlines out there this morning. So we're going to jump to weekly jobless claims first to start things off. It just doesn't stop in terms of the amount of news that we're getting. 840,000, that number coming in, 840,000 initial jobless claims for the week. It's a staggering number, folks. Every single week, we're getting basically 800,000, give or take, new people claiming joblessness for initial jobless claims. 840,000. Market was looking for about 825,000. Jumping back to the S&Ps, pretty muted response. No real reaction. Down a couple points, maybe, from that news breaking from 34.28, now 34.25. All right. So the news is second presidential debate will be virtual. Wait, hold off on that one. Trump says, nope, not going to happen. I'm not going to, quote unquote, waste my time. Folks, to put things in context, today is Thursday. Last Thursday at this time, we didn't even know that the president might have COVID. The president has not had COVID for a full week. He spent 3 days in the hospital, and he's complaining that he doesn't get to show up in person for the debate 1 week from today. To put things in context yet again, because facts are important, the first debate that they had, just so everyone's aware, the rules that they had agreed upon, both parties, was that everybody would come into the debate and everybody would wear a mask. Well, the first family came into that debate, took off their masks, sat down. Trump showed up too late to even take a test before the debate, as was supposed to be the case, okay? And then he tests positive 2 days later, and it comes out that, who knows? We don't know if he knew that he might have had it at that point, okay? So you have the president who's, by all indications, still contagious with this virus, only going 6 or 7 days after it, just because you don't have symptoms, folks. And they're saying he doesn't have symptoms. We don't know that's the case. Doesn't mean he might not be contagious, okay? And he is going to have a rally as opposed to sitting for a virtual debate on October 15th. The wheels are coming off, folks. Be careful, okay, in terms of what you're hearing out there, because it's pretty unfortunate. You have a president with COVID who will not debate remotely unless he gets to sit in person with his challenger, Joe Biden. And keep in mind what happened at the first debate. Everybody was supposed to wear masks. We know how the president feels about masks, okay? Even with COVID, we know how he feels with masks. First family showed up, took their masks off, sat down in the audience. Turns out COVID's running rampant through the White House, and now the president won't have a debate unless it's in person. We'll see how that plays out, but I don't see that helping him in the election at all. It's pretty dicey as he continues to double down on his base with 26 days until that election. All right, jumping around to equities with news this morning. So IBM, they're trading higher. They're going to potentially spin off the IT infrastructure unit and focus on the cloud business. Jumping over to IBM this morning. IBM, Big Blue, there's a pop for you from 125 up to almost 142. We're backing off a bit, but you're still up about $12, almost 10%. You're going to pop on IBM this morning at 136.86. For some context on this stock, quite a little fall off, 158.75. Now check this out. I don't even know what this chart is I have up there, but I remember putting it on. That's quite a downtrend channel, folks. Now this is going to open at 136. Now this is a monthly going all the way back to 2013, all right? IBM's got some big problems here. You're going to open at about 136, and that's quite a downtrend channel. Maybe the linear regression's a little bit lower, even to the downside there, but nonetheless, IBM continuing to struggle, but the market liking the fact they're going to spin off that unit and see where we go. On the flip side of that, Domino's Pizza. I'm a fan of Domino's Pizza. Investors have been a fan of Domino's Pizza, trading from $2 in 2008 to $400 today. Yesterday, because if we zoom it in, Domino's out with their earnings, not living up to expectations, from 442 down to 406. We're trading at 410 right now on Domino's. You're off about $20 from where they were last night. Jumping over to their earnings in terms of what they came out with. Domino's, $2.49 a share. The market was looking for $2.79. Revenue beat forecast, however. U.S. comp store sales 17.5% compared to 13.9. I mean, look at how this market is priced, folks, okay? Talk about price for perfection. Okay, Domino's, a great company, pretty well positioned right now. The only thing you could argue fundamentally is that the competition they're facing and the likes of Uber Eats, DoorDash, Grubhub, all of that, they were looking for almost 14% comp store sales. Domino's came in at almost 18% comp store sales, and they sold the stock down, talking about at least, what, 5% from $4.30 to $4.10, $20, almost 5%. The company's down when you had comp store sales at 18%. To put it back into pre-COVID levels, now look at that earnings they had in February, right before COVID hit. Strong numbers. You spiked to about 371. All right, that's pre-COVID. All right, and we're only sitting at 431. And meanwhile, comp store sales are up 18%. Staggering numbers, and you're going to trade back to 410. I mean, what's up with that in terms of, seriously, you're at 375. COVID hits. You got 18% comp store sales. They are not bringing it to the bottom line, though. The market caring about that. They're missing on earnings. But nonetheless, you're only up about 8 to 10% maybe in a world where, now, the other side of that, though, you got Uber Eats. They're consolidating, right? That industry is growing dramatically at this time. But nonetheless, Domino's trading lower at about 410 this morning on their earnings. All right, jumping back to the S&Ps, taking a quick peek, see where we're at, putting this on a 5-minute. Pretty muted response on those weekly jobless claims. So there's some rhetoric in terms of a stimulus deal. There is so much going on, folks. I don't know how a stimulus deal, whether the airlines, Democrats seem open. Nancy Pelosi, Speaker of the House, she seems open to a deal just for the airlines to save them. I mean, you got American basically back right where you were before the president tweeted out no stimulus. Delta Airlines actually above that level right now. United Airlines above that level as well. Stay tuned, folks. We'll be right back in 3 minutes. See what else we have on tap for Thursday trading. I'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If you're an Eaton Vance shareholder today, pop those bottles. It's a good day to be an Eaton Vance shareholder, as you got Morgan Stanley scooping them up in a deal valued at $7 billion. So Morgan Stanley, they came in and they got E-Trade, and they're going to continue to solidify Eaton Vance $7 billion. I believe that's cash and stock is the deal. Eaton Vance, of course, soaring higher on that news from about $40 to almost $60. You're up 50%. If you're on margin in that stock, how about 100% banger? Not bad. Morgan Stanley, we'll talk about some volatility down a bit, as is usually the case when you got the company making the acquisition, trading off a bit on that news. All right, jumping back, because you got to talk about it, folks, in terms of the presidential debate. It's supposed to happen a week from today. President Trump says he's, quote unquote, not contagious at all days after leaving the virus. First of all, I think I'm better. I'd love to do a rally tonight. I wanted to do one last night, but I think I'm better to a point that I feel better than I did jokingly 20 years ago. I feel perfect. There's nothing wrong. That was on Fox Business, Maria Bartiromo, Thursday morning. Folks, the president's probably the most tested person in the world. Get tested. Tell us you're negative. I don't see any of that in here. I assume he's still testing positive, arguing that he should be able to do rallies and debates in person. I mean, I feel like I'm taking crazy pills, but it's 2020, and that's the reality we find ourselves in 26 days out from the election. All right, what else we got going on? Tesla, pretty interesting here in terms of what they have. Tesla, one of the coolest parts of a Tesla, I don't know one, but seeing it, in terms of you can basically upgrade your vehicle, right? It's software, basically. You're talking about, well, geez, it's so easy that, you know, talk about butt dialing. How about a $4,280 autopilot upgrade for Tesla share owners? And Tesla shares, can't stop that company, from 406 to 437 for some context in Tesla. Put it on a daily. I mean, we just been consolidating. This morning, we're going to open at about 437. I mean, this is basically one big consolidation since August 17th when we began to trade higher. Now, you back things up. The day they announced the stock split was $270, give or take. We're going back to August 11th that they announced that, and we've just been chopping around in this upper level for a while now. All right, other news out there going on in terms of companies. Where are we? Companies, all right, I'll have to pull it up. Either way, we'll jump around to a few of them. Regeneron we'll jump to. Whoops. So Regeneron applying for emergency approval of the drug that they have, that the president took, that antibody cocktail. It's always great to see these types of differing cares. They can basically provide better care for people with COVID, decrease the mortality rate. You always like to see that. Regeneron charging higher on that news from about $5.90 up to $6.24. We're back a bit this morning to about $6.15.78. Jumping around to some of the stocks I like to take a look at. Disney from $120 2 days ago. We're trading higher with the market to $123. The movie theaters, though, the parks, they continue to face some problems here. One of the things I was highlighting in my newsletter, this gap from their last earnings, pretty remarkable how time flies, folks. Those last earnings were August 4th. If you remember, that's when Disney came out. They talked about when you combine Disney Plus, Hulu, ESPN, they have over 100 million subscribers to their online streaming services. Disney skyrockets higher from about 118. The next day, you were up there in the realm of 130. You closed at 127. The following day, you actually closed at 130.82, and now we've backed off a lot. And I imagine you're going to see some support. That's what you want to see if you're a shareholder of that 117 area. I say, and it's no secret, folks, talking about I am a bull in Disney. I own some Disney. We got some Disney in the newsletter. If you are able, as a long-term investor, to buy some Disney and hold some Disney until the world returns to normalcy in terms of parks open at full capacity, movie theaters open at full capacity, Disney's going to bring with them to that table 100 million plus digital subscribers to their streaming services. I imagine you're going to see an acceleration at some point, but not just yet, folks. You got movie theaters in big pain. You got movie theaters closing down. You have movie productions getting pushed back. You have Disney parks in California not even opened yet. You have Disney parks in Florida open at decreased capacity. And even as Ron DeSantis, the governor of Florida, says open up bars, open up everywhere at 100%. Folks, I'm in Florida. I'm about a half hour to 45 minutes from Disney. With the family, we ain't going to Disney anytime soon. Now, yeah, they got a lot of people, but that's not the type of crowds that deliver the billions of dollars in revenue that they're used to. So Disney continuing to struggle, 122.91. But as we back down to this area, folks, if you're a buyer and you want to be a buyer, not a bad place to get into before the world knew. Now, here, we'll do a quick recap of Disney and where they've been, folks, because this is what I was always talking about in the newsletter to begin with, okay? You back things up to April of 2019. Seems like a decade ago, but no, only about a year and a half ago, okay? That is when they actually announced the details of Disney Plus, okay? They announced the price, they announced the plan, they announced everything to do with Disney Plus on that occasion, okay? The world had no idea what it was going to be. Maybe they were going to try and be a premium service where they were going to try and charge $29 a month because they had such great brands. No, they come in and they charge, what, $7 a month? I think $6 or $7 a month. You package it with a bundle with Hulu and ESPN. You get, I think it's $13 or $14 a month. That's what I have. It's a great service. So the market says, oh my goodness, they're going to undercut Netflix. What an amazing idea. We love the fact that they're going to go for, bring in everybody. Then maybe they have the Netflix business model, right? You raise the prices, you bring them all in the door first, you get them signed up. So the market trades on that news. I mean, look where we are though, folks. They were originally had estimates of such low numbers compared to where they thought they'd be by maybe 2025. You actually go live with the service somewhere around November of last year. You trade higher in dramatic fashion. Of course, COVID hits. The point of this all being is if you back up to where we were in terms of March of 2019, Disney Plus was just basically a boardroom meeting in Disney. Nobody knew any details. It was just an idea at that time. Well, over the last year and a half, they've executed well beyond anyone's imagination in terms of 100 million plus subscribers, and that's going on last August, okay? If you get in for the long term, folks, at anywhere around these prices, that's a good level to be buying, all right? You're talking about basically $115 is the price before we knew about those details in April of last year. $117 is the price before they announced their earnings in August, which were just slamming earnings in a big way, 100 million plus subscribers. But Disney in the short term struggling. If you're a long-term investor, I see a lot of value in that company. Disney's not going away. Marvel's not going away. Star Wars is not going away. Mickey Mouse, Donald Duck, etc., folks. All right, jumping back to the markets. S&P's up about 21 points. Now, you put the S&P's on the chart. Pretty interesting that we are just hanging right at these levels that we were at pre-COVID. The highs of 35.87 back to the end of August. We're about 150 points off that level. The Dow, if you put it on the chart, I mean, you're talking about, now I had this in the newsletter as well, from the retracement we had, and that's a weekly, putting it on a daily here. The retracement we just had, I mean, pretty interesting, right? You go from full recovery, talking about the lows of June to the highs of September. We back off 61% exactly from that line, and we're now bouncing. I mean, that high, 29,157. We're within about 800 Dow points from the high we had in early September. You back this out even more, 29,543. Folks, we were up 500-600 points yesterday. We're coming right near those all-time highs in the Dow of February, 29,543. Pretty interesting with everything going on. Stay tuned, folks. Be right back after the break.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the S&P's positive by 21, the Dow positive by 194, the NASDAQ positive by 95. This news cycle, always an exciting day in the markets, folks. It's not even 9 a.m., and man, it seems like we got a week of news already this morning coming out. We'll see where the day leads us. Jumping around to one of the articles I was reading this morning on Bloomberg, pretty stark numbers here. The 50 richest Americans are worth as much as the poorest 165 million now, folks. I mean, the wealth gap, it's pretty remarkable the way it continues to grow. Not good for the future success of our country, folks. Not really what you want in terms of 50 Americans controlling half of the wealth of the country in terms of compared to the 50%. You look at it, the top 1% of Americans, really, talking not just 50%, $34 trillion, whereas so you look at the bottom 50% hold just $2 trillion. All right, so the 50 richest people are worth almost $2 trillion, and the bottom 50% of the country, 165 million, are in that same number in terms of $2 trillion. You get into some even starker numbers in here. This is the one that stands out. The top 10% of U.S. households hold 69% of the country's wealth, or $77.3 trillion, and that's up from basically 60%, 60.9% in the 80s. The very richest Americans are almost entirely responsible for that game. The top 1% held over 30% of the country's wealth, up from 23.7%. The bottom half share, meanwhile, has fallen from 3.6% to 1.9%. This data, folks, coming from the U.S. Federal Reserve, talking about the first half of 2020. Stark numbers when you look in there. There's a lot of tax discussion last night, and I don't see how, and this is my take, and you're going to call it political, but folks, you don't have a country where the bottom 165 million people are worth as much as 50 people. That's not a future area of success. You got to have opportunities for growth. And as that wealth gap keeps dividing, it's a problem, folks. It's a problem. And this has nothing to do with politics. You need some hope. You need some progress for people in those situations. Stay tuned, folks. We got an exciting day in the markets. We got our man Larry Pesavento. It's coming up next with Trade What You See. We'll be right back.